As interest rates keep falling here, some people say they're down to ridiculously low levels. At some point, you need to ask yourself, what about housing? That's right, housing, one of the ugliest parts of this market, should also be one of the biggest beneficiaries of lower interest rates because guess what? Mortgage rates have been coming down too. Meanwhile, pricing on homes, which had come up too far too fast, perhaps, is now stabilizing, so houses are becoming more affordable. Yet you don't see anybody revising up their estimates for the home builders, and their stocks are in the doghouse. What is going on here? Let's take a look. Got to take a look at this one, because this one doesn't make any sense to me at all, frankly. This is called TRI Pointe Homes, TPH. It's a smaller home builder. It operates in 7 states out west. The company just acquired Weyerhaeuser's home building division in a $2.8 billion deal last month. It was part of a complex process known as Reverse Morris Trust. Now, TRI Pointe reported last week the company actually delivered some excellent numbers. 4-cent earnings beat off a 16-cent basis, higher than expected revenues, and a 54% increase in their backlog. Plus, I thought their guidance, the first forecast as a combined company, Weyerhaeuser's real estate division, was pretty robust. Yet this stock is still less than a point above its 52-week low. So let's check in with Doug Bauer. So let's try to solve this mystery. He's the founder and CEO of TRI Pointe Homes. Find out more about how the company's doing and where it's headed. Mr. Bauer, welcome to Mad Money. Good to see you, sir. Thank you for coming on the show.
Thank you.
All right, when I saw your stock handling, I saw your stock's down 33%, and I saw the ultimate valuation of the company, which to me is worth less than the business you bought from Weyerhaeuser. I just think that this group is in some sort of funk, and you couldn't break out of it no matter what.
Well, it's, you know, the whole transaction, the Reverse Morris Trust you indicated earlier, it's a very complicated transaction. Right. And when we announced it back in November, you know, our stock initially went up.
Right.
And then during the whole process of a Reverse Morris Trust, there's a huge trading game between the ARBs, the shorts. You had all that going on, and then you had the announcement of a split. There's been 28 Reverse Morris Trusts even done since the tax code enacted. So when you take a look at the split, when Weyerhaeuser announced a split, they had induced their shareholders to a tune of about 10%. So you take another drop. So there's been a lot of technical noise around that stock.
I was going to use the word technical because, look, you're doing better than almost every home builder I know. And yet your decline is greater, which is where I think the opportunity is. So why don't you tell people about how well the company's really doing, your position in all the places where everybody is land short, you're land long, your home's $500,000 price point, that's where people who have, who has money to spend. So just walk people through why this story is different from the other home builders.
The key drivers to TRI Pointe going forward in the future is, number one, we are a premium builder. Our average sales price is $543,000, just below Toll, so we're kind of number 2 in that segment.
Right, but it's also in an area that's doing better. Toll's got some areas that aren't doing as well.
Doing very well, but now we have a bigger sandbox to play in. We've got 31,000 lots, 17,000 of those are in California, which is a very land and entitlement constrained market. The fact of the Reverse Morris Trust, Jim, that's really, I think the investors don't understand is the minnow swallowed the whale.
Right. Well put.
But the book basis for the whale comes over. So the assets at Weyerhaeuser Real Estate Company come over at a very attractive basis. Right. So these 30,000 lots that I have to play with, especially in California, you know, provides a lot of growth opportunities for the company. The second key thing is the RICO companies were part of a timber REIT. You know that.
Yes, right.
You've had Dan Fulton on your show.
Right.
He's one of our board members. He's just an outstanding
did a fabulous job, Weyerhaeuser.
Well, but RICO, part of a timber REIT, was being run as a cash company, not a growth company for earnings.
Right.
And then lastly, they hadn't looked at a lot of the ancillary businesses, title, insurance, mortgage, stuff like that. So those are the 3 key drivers that we see for TRI Pointe for the future.
I mean, one of the things Dan said to us was, look, it's kind of undermanaged. If you got it at the right home, you would see how much it's worth. And I think that what's happened is everything's been clouded. I mean, look, I don't want to pick on any particular home builder, but I would do a paired trade if I were at a hedge fund, meaning I would buy you and go short another because yours is dramatically undervalued versus the rest. So how can you bring out that value? What has to happen?
We need to execute. We need to increase deliveries. I noted on our earnings call, we're looking at 25%, in excess of 25% earnings growth. We gave the street guidance, earnings growth, delivery growth.
Okay.
25% delivery growth and a $1.25 to a $1.40 as far as earnings. So we've given a lot of visibility in light of the fact that the market, as you said, is choppy.
Right. We should talk about that. I mean, how much of it is that the housing market got cold again?
You know, it's gotten choppy and it's gotten cool, but housing's a very local business. But when you look at the bigger picture, what I see for the next 3 to 5 years is a very slow and steady recovery. You've had fiscal constraints and accommodative monetary policy, but you haven't had capital come into the space and overbuild like it did in 2007 to 2009. So we see a very slow and steady recovery, and we can fuel ourselves right into that market with these 31,000 lots.
Your houses are not too expensive for your neighborhood, right? I know houses some places in the country got too expensive. Not in yours.
No.
All right. I think if you execute and you do that number, it will be revealed that your stock is about 6 multiple points below everybody else. Makes no sense to me. You got a good company.
Thank you.
Absolutely. That's Doug Bauer, the founder and CEO of TRI Pointe Homes. Understand, I love the Weyerhaeuser home business. This is it. It's just got a new structure. Mad Money's back after the break.